Hello, everyone. Welcome to yet another weekly analysis. So, for this week, we have a lot of things to learn from. A lot of ideas in the market right now are unfolding, and then we have a lot of things to learn from it. So let's kick off. Let's kick off. The week with Usdcad. Now, if you remember, if you've seen the last video, you can go back and check. You can go back and check. That's the beauty of having to record these videos. They are more like proof. They are more like proof. If I'm lying, you will see it. If I'm not lying, you will see it. You see what I'm saying? So they are more like proof. So if you go back and you know, if you go back and watch the videos, you would see that we made the projection for USD card, we made the projection for Euro USD. These are not, it's not a big deal, right? It's not a big deal. But what matters is that we are spot on. We are spot on. You see what I'm saying? So moving forward right now, we still have projections for USD card, but not of Euro USD. But we will make an analysis to help those who may be struggling, right now. So let's kick off with USD card. Now from the monthly time frame. Every time we will start from the monthly time frame, it helps to refresh the memory of where we are at. Now, top down analysis. From the higher time frame, we work our way to the lower time frame. All of these time frames, they have specific uses. Now, from the monthly time frame, we don't trade on the monthly time frame. That's what I'm saying to you. We come here to see where the market is headed, where it is coming from. Now, it is as simple as ABC, right? We can see that the market is coming from a very important area of interest. You can see right here. It is coming from where a very important area of interest right here. You can see right here, right? Right here, right here, and right here. So it is safe to say that we have a bird's eye view. We can see the market like a hawk, like an eagle. You see what I'm saying? To we have a bird's eye view of where the market might be headed to. Now, is it 100% that the market will come here like a ping pong, play up, play down? It's not 100%. That's what I'm saying to you. But we have a bird's eye view of where we might be headed. Now, we don't just have this. It's good to have this projection, 1,000 pip, 2,000 pip drop. It's good to have this optimistic projection. But like I said, every time frame tells us something different, tells us a different story. So that is where the weekly time frame comes in for us to capture a range. You see what I'm saying? For us to capture a zone, rather, not a range, sorry, a zone that we can focus on. It will be insane for me to for us to focus on trading all the way here. You see what I'm saying to you? It will be insane. But it will be sane for us to focus on a specific range from here to here. From what? From here to here. And this is about 700 people. You see what I'm saying? So we can say, okay, the markets have successfully conquered this drop to the downside. So we're expecting to conquer this drop. Now let's go to the weekly time frame and see what we're expecting to happen in this range. If you notice, I haven't marked up anything, any daily areas of interest, to sell down here. Because why? We are focusing on a particular range. So now let's zoom in. Now we can zoom in. Now on the weekly time frame, we do not also trade. We do not place the trades here. We do not place our stop losses. No. Here we come to capture a zone. You see what I'm saying to you? The way we capture these zones, we use chart patterns. You see what I'm saying? I use chart patterns. If you notice, you can see that my support is at a very, very crucial area of interest, right? Chart pattern, double bottom right here. It's also here at a place where the market has definitely reversed, double top, everything. So and you can see now, yeah. Now, whenever we break a zone, we need a retest. Trading is it, the most popular trading strategy out there is break retest. Everybody knows that. So we play it forward, right? So right now we're expecting a retest, right? Or rather, it has already given us a retest. Now we are confident that this zone that we just broke into is strong enough to push us to the downside. Now we've established that we are also bearish. As we've broken structure, we've retested it. Now we are south. The very, very huge Marubozu candle, bearish and coffee candle, giving us a lower low. Now we'll go to the daily time frame. Now, whatsoever the projection on the daily on the week on the monthly time frame rather, and on the weekly time frame is, we keep that aside. We come to make sure that the daily time frame is trending in that direction, is what trending in that what direction. Now on the daily time frame, we can also see that we are bearish. Now I have a trade here. If you remember, I mean, we made the video, we executed here. I have a trade here still playing out, right? And now I can see a potential what setup, a potential what setup for us to execute, and this area right here fits in a Fibonacci range, 60%. Let me show you right now. So this area right here, what fits in the Fibonacci range. Now there's something I need to hammer on, right? The Fibonacci is not the tool that I use to mark our support or resistance area. The Fibonacci is a tool of confirmation. It's a tool of added confluence. I need to say that out. The Fibonacci is what, a tool of what, added confluence. You need to already have a zone that you are expecting to sell off of or buy off of, and then let the Fibonacci tell you, okay, yes, I can corroborate your story. You see what I'm saying to you? Let the Fibonacci be an added witness. So moving forward, right? Now we're expecting the market towards retesting. Now we'll go to the lower time frame, the 4-hour time frame. Now you can see how we've been playing from the monthly, weekly, daily, and in every time frame I've told you what a different story. Now on the 4-hour time frame, yes, we execute on the 4-hour, on the 1 hour. Now you can see that we've already retested it on the 4-hour. I have a sell active here. I have a sell active here. I have a sell active here. There's something you need to understand. You need to understand that in trading, you have to add to your winners. You see what I'm saying to you? You have to what, add to your winners. And that is what we are doing here. We are adding to our winners. You see what I'm saying? We're not going to bank on the loss, or bank and say, it should, or be optimistic and say, it should turn around. No. You see what I'm saying? We cut our losses short by using stop losses. You see what I'm saying to you? So moving forward, now we've had a retest. We are potentially, we can see like we're having a chart pattern, a reversal chart pattern, head and shoulder. Now we could have a potential retest. Like I said, a potential retest. The markets can open up next week and plummet to the downside from there. You see what I'm saying to you? Anything can happen. So I say what, a potential retest of this area, and then I can add another position. You see what I'm saying to you? I can what, add another position. Now, in all of these positions I am adding, my risk is just 1%. What that mean? If every position is accumulated, all of them that are open, if I take a loss, say the markets open next week and then goes up and I take a loss, I will be down just 1%. You see what I'm saying to you? So I cut them, I cut my trades, I cut my risk, I place, I invest in a little amount to say, okay, let's see how it goes. It continues to go down, I have more rewards, and I add another risk. You see what I'm saying? So that is what it means to what, add to your winners. So we are adding to our winner. So right now we need the markets to retest this area right here. If it wants to, we do not know, but we are expecting it to retest this space. When it does, we will use our entry strategy of what, counter trend lines. You know how it goes, counter trend lines and break of structure, and then we execute. We do not know if it will retest, but we are what, expecting it to what, retest. So moving forward, now that is it for Usdcad. It is simple. All we have to do is what, wait, be patient, sit on our hands, let it come to us. We do not run to the market. We let the market what, run to us. So moving forward on Cadjpy, now Cadjpy, I will start from a monthly time frame. Now Cadjpy on a structure based analysis, it's giving bearish, right? It's giving bearish structure, chart pattern. It's giving bearish, but like we said on like if you remember Usdcad, I said something about the weekly time frame. We need to capture a range. You see what I'm saying to you? We see a head and shoulder, right? We can be optimistic. Oh, the market is about to drop, break past this level, and fall all the way down here. But like I said, we trade with ranges. We trade from this range to this range to this range. We have to clear a specific range before we can, invest our time into another range. So on the monthly time frame, we've seen that, we are bearish, but very important for us to note that we are at a very, very crucial area of interest that could possibly what, push the market to the upside. And now we can also see that the monthly time frame is not just there for show, but it is also telling us that, I have had a significant spike. You see what I'm saying to you right now? I have had a significant spike, which is what a bullish engulfing. And now, if we go to the weekly time frame, with the information we have, we can see that we are having what a reversal pattern formed. It has already formed rather a head and shoulder mixed with a double bottom. In fact, the market is doing everything possible to tell you, my brother, my sister, I am about to reverse. I'm about to what reverse. So you should be looking for what buys. And now you can see that we have our zones plotted out and we're expecting the market to what retest. And if you see, this looks very, very beautiful. Lower low, lower high, lower low, a higher high has been put in, a higher low. Why is this a higher low? Because why? We've created a higher high. Now we go to the daily time frame. We go to say, okay, where can I execute from? You see what I'm saying to you? What area, what price should the market get to for me to say, okay, this is good enough for me to buy from or sell from? Now, we have our area right here that we've marked. It's very easy. It's simple. You do not need an indicator to help you plot support and resistance level, right? We have a very, very crucial head and shoulder, head and shoulder, head and shoulder, head and shoulder. You can see 105.000 is very beautiful. It's very beautiful. You cannot have it better. You see what I'm saying to you? So we're expecting the market to retest. And now we'll go to the 4 hour time frame, right? Now there's something I need you to understand. The market is precise. The market the market does not make mistakes. The market what? The market is precise. Now if you look higher high, higher low, higher high. This is a potential higher low. We never broke structure on daily time frame. We never broke structure. We are still bullish on the daily time frame. You see what I'm saying? All it did was it came back to demand, and that is giving us this push right here, right? So now we'll go to the 4 hour time frame to wait for a retest. Now, if you notice on Cadjpy and on Usdcad, we are waiting. We are sitting on our hands. We are not selling the retest. You see what I'm saying to you? It is a degenerate move to sell the retest. To sell the retest, it is a what degenerate move. So we're expecting a retest. When that happens, if it happens, it happens. But whenever it happens, we will use our entry strategy, counter trend line and a break of structure, then we execute. You see what I'm saying to you? It's as simple as that. So for now, you might be wondering, you might be thinking, I have to trade next week. I have to get into a trade next week. No, you don't have to get into a trade next week. You have to wait for the market to give you an opportunity. Like I said before, the market does not make mistakes. It does not. You see what I'm saying? So you have to wait. So on USDJPY, but there could be something on USDJPY. On USDJPY, in my journal, I just finished journaling, so I have my plans written down. I don't just make the YouTube video. I also have my plans written down. So the YouTube video is something more of, it holds me accountable. If I do anything that I have not written down, I'm like, okay, what if I come next week? What will I tell my viewers? You see what I'm saying? Will I be a hypocrite and say, oh, I plan to take USDJPY, but I took something else? No, what we've written down is what we've planned. Even though I don't plan the trade, that would be the weekend, and I come into the week and I see opportunities, I have to also write it down in my journal why I'm taking it. You see what I'm saying to you? These things help you, take responsibility for your actions. They help you mitigate your losses. Now, even if you take a loss after journaling your trade, now you know why you've taken the loss. You've written it down. You see what I'm saying? You can go back and revisit your losses. It's important for you to revisit your losses. Your losses are not just there for you to to ponder upon, to cry over. They are there for you to revisit them, revise your losses, revise your winners. You see what I'm saying to you? Now, if you notice, you can see trend lines here. These lines are already here because why? I was revising my losses, I was revising my winners. So on the monthly time frame, let me take this out. On the monthly time frame, as per usual, we are bullish. I'll say this. We are bullish. Structural wise, we're bullish on the monthly time frame. We're bullish. Now, just like Cadjpy, you need to also know we trade from range to range. We are at a range that could potentially give us a push to the upside, or we could fall face down, fall south. Now, I need you to understand something, right? In Cadjpy, right, we had a bullish engulfing, and that was more of a cement for the monthly time frame to tell us, okay, we should be looking at the upside. But on USDJPY, we have no bullish engulfing, right? We can see indecision candles, the doji, and this one is still forming, so we cannot count it in. So now we go to the weekly time frame. What can we say is happening? On the weekly time frame, we can see that we are coming off of a very important area of interest. Now, there's something I'm going to show you right here. We can see we're coming off of a very important area of interest, right? we should be expecting a bounce just like this, right? But first thing first, we are bearish. That's first thing first. We are still bearish. We haven't had enough momentum to work break structure, so we are still bearish. Now take that into consideration. Even though we are coming off of an era that should push us to the upside, move like a ping pong, so on the daily time frame. Now this is where we might have a clearer view. Now, is USJPY a very risky trade? Yes, it is riskier than the past two trades I just analyzed. So on my journal, it is a very risky trade. In this occasion, we have to reduce our risk. Would I say I would not take it if the opportunity arises? I would take it. I'd rather suffer a loss than suffer an had I know. I'll take that again. I'd rather will suffer a loss from a trade than suffer what? And I then know, oh, I could have taken it. Oh, I would have, should have. That doesn't make money. Taking a loss makes you money because you learn from your mistakes. But sucking over a trade that you should have taken because you were scared. No, scared money don't make no money. You see what I'm saying to you? Scared money what don't make what no money. So on here we're not scared. We're not scared. We're not scared to take risk. We're not scared to take a loss because why? We have a very structured what? Risk management. That's the key. That's the key right there. Not if you notice, I did not say a structured strategy. No, it's not every strategy works. What doesn't work is the man. The person using a strategy is what does not work. Every strategy works. You see what I'm saying? Whatever you're doing, but some work better than others. But every strategy works because it puts money in your pocket, right? But what doesn't work is the man. So if you notice, I didn't say, "Oh, I'm confident," because we have a very, very good strategy. Even an AI could trade for you, a robot could trade for you. You see what I'm saying? But what we have that is our edge here is not is risk management. I I can be down 4% and still sleep at night. Why? Because I know I have a what structural, a risk management in place. You see what I'm saying to you? I know that even if I'm down 4%, when I execute a trade, it should play my way. You see what I'm saying? It should what go my way because also you need a very structured strategy to don't get it twisted. You need a structured strategy to be able to succeed as well. You cannot take nonsense here. You need the what structured strategy. But moving forward, let's not digress, right? So now there's something I need to understand. Before the market reverses, it tells you, hey, I'm about to reverse. What are you going to do about it? Are you going to fold your hands and watch people and watch me make the move? The market will tell you, like I said before, the market do not make mistakes. We make mistakes. So the market is telling us right now, I'm about to reverse. Why? It is giving us a signal for head and shoulder. So it is giving us a potential head and shoulder. A head and shoulder, a head and shoulder is not complete until it breaks the neckline. We have not broken the neckline. So this is considered a potential head and shoulder. So I am hoping to I am expecting myself to act on this head and shoulder. You see what I'm saying to you? So moving forward right now, I'm not just you know a random head and shoulder, but it is at a what area of interest? 144.500. Very, very beautiful area. If you notice, I have these prices marked, you know, beforehand. So it's not something that I just plotted because I see a head and shoulders. No, these prices are plotted beforehand strategically. You hear me? Strategically. So we go on the 4 hour time frame. Now on the 4 hour time frame, we execute. I need a break of structure and a break of counter trend line. There is no structure here, so let's go to the 1 hour. You see what I'm saying? Oh, beautiful. We have what structure. You see what I'm saying to you? We have structure. So I need this counter trend line to be broken for me to execute my trade. So at the end of the day, we are still sitting on our hands. So that's it for the week, guys. These are the pairs for the week: USDJPY, Cadjpy, Usdcad. We are sitting on our hands. Let's learn to sit on our hands. Let's learn to be patient. Let's learn to wait. You see what I'm saying to you? I know, yes, you are eager. Your trigger finger is itchy. Yeah, but relax, relax. You see what I'm saying to you? Relax. Trust me, if you actually, turn off your laptop, turn off your phones, and come back a week later, you will see that you might have avoided losses. So I hope and I pray that you lot use these analysis not just for show, but I'm hoping that people actually come and use these videos, not just adopting my ideas, but using it as confluence for your ideas. So have a great weekend. Have a great week. Ciao, ciao.